Welcome to Financial Repression Authority's Roundtable Insight, where the best fund managers, economists, and industry leaders discuss the key investment issues and challenges in the current macroeconomic environment.
Hi, welcome to FRA's Roundtable Insight. This is Richard Bernoulli. Today we have Judd Hirschberg and Yras Harris. Judd and Yras are both independent traders for over 40 years. Judd has run proprietary groups and is president at the White Wave Trading, a trading company and our partner for trading research consulting services at Cedar Gold. And Yras is a CME director now and also from 1997 to 2003. Welcome, gentlemen.
But maybe not for long.
Okay.
It's their lot.
Yeah. Okay.
Great. Yeah, today I thought we'll do a focus on trading strategies, what tools and techniques that Judd and Yras employ when trading on a shorter term horizon relative to investing, why and how these make sense, what their global views are in the current environment of the financial markets. Judd, can you give your history and background in trading, how and why you got into the field, what makes it exciting for you, and how you generally approach trading?
Well, I was interviewing with a paper company, and I watched a cattle opening one morning, and I came upstairs to Barry Lynn's office in Lynn Waldock, and the gentleman that started Discount Futures looked at me and he said, "You start tomorrow." I said, "I don't have any clothes." "Well, then you start the day after tomorrow." So I started the day after tomorrow, and I've been there. I was there ever since. And that's how I got into trading. And Yras came down a couple of years later. We've been friends ever since he walked on the floor.
Great. And
so I started out as a local, and I've been trading my own money for forever.
Mm-hmm. And how do you generally approach trading in terms of your overall strategy?
Well, it's evolved. I mean, before I was just a day trader and a scalper, and now with Yras' help, I've become a global macro trader. We try to come up with themes. We look for relationship trades, and then I look for the triggers on those trades, which meaning I'm looking for trade locations so I can have a low risk entry, see if they play out. And for me, it's all risk reward.
And Yras, about your history and background in trading as well.
Well, yeah, I came to the floor really steeped in a fundamental background as I was in school and graduate school at the right time. Actually had the desire to get a doctorate in basically political economy. I had great teachers, and the world, Bretton Woods had just ended, and the world was igniting, and I was through the back door began to understand and studied capital flows through how multinational corporations at that time were adjusting to all the currency movements, and in that regard, I gained a very good background in understanding credit and, of course, foreign currencies and the effect upon each other. And the last thing I wanted to do was to be involved in trading. I had designs to be a policy analyst and maker, hopefully. And then it's kind of in between figuring out. I left school because there were no jobs teaching, and there was no sense to go through the arduousness of sitting for my orals or certainly writing a dissertation. So I somebody introduced me to the concept of working around it, and after rejecting him twice, the third time he said, "Well, if you don't take the job the last time, I'm going to offer it." And I really wasn't doing much, so I went to work with him, and the rest, as I say, is history. But I begin with fundamental analysis. I always have, but I've learned, and Judd and I have learned a lot about technicals. We're not going to talk about his name, but from somebody who we think is probably the most astute, what we call technicians, one who really involves in different methods of market measurements. And in that we set our, as Judd talked about, the loss parameters. And so where I was not a big proponent of charts, the more pain you lose because you can't identify where you're wrong, the more you accept the premise of what charting is about. So to me, the perfect combination is combining the two. My fundamentals will direct me where I think the markets ought to be going, and the charts give me a very good view and timing mechanisms as a way to control my risk. And I think that's what Judd and I both, I've taught Judd the fundamental side, and he's far better technician than I am, but we both were tutored and paid for that tutoring substantially by one of the best I think that's ever lived. But
and Judd,
it's all about, Ira's got a viewpoint that and a vision that far exceeds anybody on the planet, and how he views the markets and how he puts together the global macro. And I just spend my time looking for the triggers for those scenarios. So it's a great combination.
Yeah. And without giving away the secret sauce, can you go into a bit more detail on those, how you approach the risk reward and tools and techniques? Do you employ charting or intermarket analysis?
Well, a lot of it's relationship spreads. So whether it's what's one of the key indicators that we use is S&P bonds. Ira came up with that concept on a run in the early 80s. And we've basically taken that idea and spread it across all asset classes. And we look at those intermarket relationships. We look at the currencies for capital flow, seeing if money's coming in or out of a particular currency and where that money's going, and then try to determine whether that capital flow is worth getting on.
And do you take a similar approach, Ira?
Oh, yeah. Judd is certainly better with the technical, but yeah, that's where it begins. And sometimes it gets you into trouble because you wind up being a spreader where you shouldn't be. But as I get older and I learn more patience, I will lay off a leg. Today's a classic case. Lagarde and the ECB meeting. I have a view. I'm really a lone wolf out there. And I'm not quite a lone wolf. Hugh Hendry and a few others have been on that camp. I am developing a very dollar bearish position because I think it's the missing link in trying to prevent, if you accept the premise that the Fed and the other central banks are trying to prevent a deflationary spiral. Well, Richard, we've talked about it numerous times. So on this podcast, and if you think that that's what they're trying to do, they need the dollar lower. The disappointing thing is that the questions, like at Powell's press conference yesterday, they're just, they're as Woody Allen would say, they're insipid. They all follow the same theme, which is crafted by either prepared questions by analysts who the media uses, or they just follow the fact. And I wrote in the blog, as you know, on Tuesday night, that the question ought to be about the dollar. Does the Fed, even though the Fed's bailiwick is not the dollar, when you're in the middle of this is a financial crisis. How it develops is a topic we've discussed long before, and we'll talk about it next time. But it's a financial crisis, and therefore, if you're trying to prevent a deflationary spiral, which you're in the, I can just look at, Judd will do the chart work on the Bloomberg index, on the CRB index. Commodity prices are way down. The dollar has gone up in spite of everything that's gone on in the U.S. between the Treasury and the Fed. which would typically send the dollar lower, which it hasn't. And yet we know that the emerging markets are so loaded with dollar debt, so that when the dollar goes higher, especially against their domestic currencies, the burden of that debt becomes greater. So this is where we sit. So not to ask him whether he's concerned. Now, with that concern, with all the programs that the Fed has put into place, hold on one second. Okay. So with all the programs that they've put in place, you would think that why aren't they mimicking the Swiss National Bank and going into the global markets and purchasing foreign assets, right? You've already broken all the rules. So that would be my question. Why aren't you purchasing foreign assets? And the Fed has done it so well. The Swiss have done it so well. Why not mimic it? So that would be my question. But so with that in mind, when I watched the markets after Lagarde, first they tried to rally the dollar off of Lagarde, but then I saw the Bunds going up, and I saw, and Judd was doing really good work with this, and even the Italians bounced off the throw, and the French was rallying, which told me that that's a way for people to buy euros. And then sure enough, the euro turned to go higher fairly dramatically. So, I'm wondering whether there is going to be some program. And then there was, of course, a news story on Bloomberg, a very short news story early this morning that Mnuchin had a conference call with all the finance ministers of the G7, which immediately caught my notice because somebody's got to wake up that they need a lower dollar.
And today was the first day that you saw the commodities actually catch a bid, and then the dollar weakened. First it was the pounds that were strong with the gilts. The beans the grains finally caught a bid. Now whether that sustains, it's just month-end machinations, remains to be seen. But that's, for me, that's the first sign that, Ira's scenario is starting to play out.
And you see, Richard, picking up where Judd, see how that all comes together? Now, it doesn't mean it's right, but with good technical work, with both Judd and I learned at the feet of Yoda, or as I used to like to call him, Gandalf, we minimize our losses. We see this and we put it into action. Because right now, that's why my company, when I had a company, and I was always called Praxis, because it was the ability to take the theory and put it into action. And by combining the fundamentals with the technicals, it provides a very good battle plan to go to war with.
And Ira and I have developed a price template. So if you will accept the premise that markets have muscle memory and come back to certain numbers, we've developed a spreadsheet that with one look, we know where the market wants to go. And then my job is to figure out how it's going to move from A to B.
Mm-hmm. Can you take us a couple of months back? Ira and I actually did a podcast with David Rosenberg, Jim Bianco, and Peter Buchwald, the Horsemen, the Four Horsemen. Remember that?
The Four Horsemen.
Yeah. And,
the Four Horsemen of the account.
Yeah.
That was about 7 weeks ago, I think. 6 weeks ago.
Something like that.
Yeah.
At that time, Judd, what were your indicators showing? Did you see different markets coming together to form some type of trends?
Well, the S&P bonds and NASDAQ bonds, failed. And I had a price target at 3,400 in the S&Ps, and the high was 33.90 or 33.97 and a half. So it basically got there and then fell apart. So I know where the market needs to trade. I've got it mapped out, and those prices are on my sheet. And when they get to these levels, I start looking for confirmation of either further strength or weakness. And Ira and I had been looking at this level from that the S&P bonds did not make a higher high, while the indices were making higher highs. So you had a divergence, and we used that divergence to sell the market. And all my IRAs got out of the market and went short. I mean, one of the guys made 29% just being short. So that's how we approach it.
Mm-hmm.
I mean, this is the same thing. In 2017, Ira and I were doing he was doing an interview with Rick Santelli, and the S&P bond spread broke out in 2017 in the first week in October, and I had it's at 2,500. Both of us thought the S&Ps were going to give us one more chance to buy at 24.78. They broke out above 25.30, and I had a 29.65 target that I had generated months before, and the high was 29.44, and then it broke 500 S&P points. So we can very accurately map out how these markets are going to move from A to B. It's a much more accurate process than it is doing an earnings or PE study.
Mm-hmm. And what is your time horizon generally? How far out do you look at, or that is that dependent on what's happening?
Well, for me, I start out with the shortest time frame chart I'll even look at is an hourly or a half day chart. But generally, we start the progression from daily, going out to annual charts and life of contract. Because I need to visualize what the market's trying to do, how it's trying to move from point A to point B. And you can't do that looking at a short-term chart. You have to have long-term historical data to really see that. And for me, time in the trade has got nothing to do with it. It's distance traveled. So if it's going to move 20 or 30% in a day, okay, let's 20, 30% take the money. If it takes 6 weeks or a year or 2 years to do that, that's another story. But it still comes down to risk management and distance traveled, not time in the trade. I think that's people on Wall Street and the public are programmed to be in a trade for X amount of time. It has to be long term. And in today's market, and in today's world, for the last 2 months, it's not the way to be.
Mm-hmm. And in terms of what you see likely to happen over the next, let's say, 2 to 4 months time frame in the different areas, commodities, currencies, fixed income, equities, do you have views? I leave those views to Ira, and then I try to make sense if I can make money off of them. Because right now I've just stopped thinking about the fundamentals making sense because we have another liquidity-driven rally. Ira, you want to talk about that? I mean...
Well, I mean, this has been a struggle for a lot of people because fundamentals have been squished by the quants because so much of the activity in the market has been quant-driven, whatever that term means. I mean, there's different types of algorithms, and the algorithms seek out correlations, and those become the narrative for the fundamentals. But they're not really qualitative fundamentals. So they're not qualitative fundamentals. And here's the classic case. We've had the market in a rally mode, as we've talked about, all the way up to February, and it was pretty well correlated because number one, you had the risk parity people who had their trades on, and then you have all those people who mimic them, and then you had, of course, the massive vol selling, which was an alpha-based strategy, and which to me is insane. But underneath that all was a complacency, and the complacency was levered up with more and more debt because the more those strategies worked, because they were so big upon themselves that they became, as they teach you in Econ 101, ergo post proctor hoc, which is a self-fulfilling prophecy. And so no matter how many times in the blog, and Richard, no matter how many times we discussed that this short vol was a horrendous strategy, and it was going to blow up. It was being paid for over and over again because anytime you get a situation where you get a spike in vol, the vol sellers would show up and they'd be rewarded for it. Until this time, when the vol stayed spiked, and of course, being a short seller, you need a lot of capital. When that capital runs out, now you got to start covering positions, and that was the panic. And that's when the Fed panicked. That's when everybody panicked because the short vol sellers ran out of capital, and how were they going to finance the position? Well, that's the debt fundamental that people like Lacey Hunt and David Rosenberg, they've warned about this. Peter Booker, before we've discussed the importance of this, and it came back. Now, as Judd talks about, seeing it and trading it is far different. I can have a long-term strategy in how I see the market, but my trade within that strategy is going to be much more dependent on technicals, because especially in an algo, because I've seen things that have been able to sustain themselves that could never have taken place before. But because the AI instruments have so much capital behind them and the ability to drive markets, and once you have supply leverage, even that much more, my goal is to survive to tomorrow, to fight and see, and when things evolve, they'll evolve. Now they've evolved. So for 2 months, the fundamental, 2.5 months, they've really been running the show here. The algos are trying to reassert themselves, and they will, and they'll look for new correlations. But right now, the fundamentals, and the Fed's trying to crush it, of course, because they can't. They're responsible for a lot of the fundamentals, and they can't really stand for the fundamentals to bear itself out. So that's okay. I have to trade. And it's back in the 90s, I went to visit a group of people who were working on what was then a global capital account, and it was an article in the Wall Street Journal. It was Jeffrey Bell and Lehman, and there were 4 of them. And I went to see them in Alexandria, Virginia, and we talked for about 4 hours. And when they walked me to the elevator, they kind of all said to me in unison, "You are destined for an insane asylum." They said, "You think about these things in long-term perspective and you try to make money on a day-to-day basis, you're doomed." So we had a good laugh. I went on my way and they went on their way. But that's wow. Absolutely occurred. I had a great visit with them. I just called them up after I saw the article in the Wall Street Journal. I think it was 1995. And I had to be in Washington, D.C. anyway, so I stopped. We had a 4-hour meeting in Alexandria. It was great. I learned a lot. They were very bright people. They were working on an interesting concept. So, but they were laughing. They said, "You'll be in an insane asylum."
Wow.
No, you can see this stuff with the price template that Ira and I follow, and with the relationship spreads, you can definitely get a heads up as to what's going to happen.
Mm-hmm. And in addition,
go ahead. Yeah. You have to be willing to do the work. When people say, "Oh, you must be retired," I said, "No, I'm working 14 hours a day." And even people who know me well, they say, "Well, you must have 4 or 5 people working with you." No, there's me. That's it. Well, how do you get that blog out? I said, that's just the stuff that sits in my head. That's what you're getting. So I get to, sometimes when you write it down, it makes more sense to you. And then, of course, I get such great feedback from so many different people. If you go on the blog, it's the stream of thought that takes place that makes it all worthwhile. I got Mike Temple, who's really great, Schurz, Dave Richards I know he writes from Singapore. I got people all over the world. Then I go into Judd's room, and with the Financial Repression Authority. All this gets the thought process. And when you're in this business, this is a communication business. You can sit at the computer all you want, but at the end of the day, it's the sharing of thoughts and information that really gets you the best opportunity. And because this is there's so many egos in this business that when you try to explain things, and I'll take you to a classic case. January 15th, 2015, the Swiss National Bank pulled the peg. Now, I was on with Santelli on the second to last week in December of 2014, warning about the Swiss meeting that was coming up. And I laid out why something big was going to happen. And it was based on technicals, because you can go back and Judd would show you the charts in a minute. If you look at the Euro-Swiss spread, it had gone sideways, absolutely sideways, which we love. Any technician loves sideways because a sideways movement for a long duration tells you a lot. So I'm watching it, and the Swiss are actively intervening to keep the Swiss weak, and they can't get the peg off the floor. The Euro-Swiss was at 120. So I said, they're spending way too much money. Something has to give. And then I was on a week before that, and I'd written a few blogs about it. So when I had to listen to some of the idiots in the media say, well, nobody saw this. Yeah, you just weren't listening. I said, watch what's going to happen. And I had a discussion with a few vol sellers who were busy selling calls on the Euro-Swiss. I'm sorry. They were selling vol. They were selling puts on the Euro-Swiss. I said, I wouldn't do that. And vol was at record low, but they kept making money. And that thing blew up. They lost fortune. And that's the kind of discussions you need to have. But unfortunately, there's too many people who think that they know everything. And you can't tell them these things. But if you were involved in these kinds of discussions, it's like if you were involved in Judd's room on a daily basis, you would hear some ideas. You might be able to ferret out. You may still proceed, but you might say, hey, I didn't think about that aspect. That has value. Every great trading room I've ever seen, the top macro guys I know always took an hour a day to discuss ideas, no matter what happens, because that's the way you ferret out the best ideas. And maybe I didn't think about that. So this is important. These are important things. And this is the additive that we bring to the market. And that's what the charts will show you. And that was an easy trade. I didn't trade it well. I made more money actually selling the Swiss on a massive rally for 2 days. But to me, it made perfect sense. And you can go look at that chart as it continues, and it's still impacted the way the markets are reacting. But it was a critical moment. But there's just too many egos. And of course, the mathematicians go, well, the mathematics is borne out. Listen, I'm a big believer in mathematics. But sometimes you have to look at something bigger and maybe discuss it, and it's outside your comfort range. And that's what, if we're good at this, that's what we do.
Mm-hmm.
Yeah. See, Richard, I know that Yras studies all day and reads all day. So if I see something that's interesting and I know that might pique his curiosity, I just send him a chart. I don't even talk to him. I just email it to him.
Mm-hmm.
And then he'll either respond or he won't. And currently, I think we have over 65 hours on White Wave Trading YouTube channel that you can go and listen to these conversations that we've had in the room that have led to monstrously profitable trades the next day, that day or the next day. I mean, I think we've made, in those conversations, I think we've made $300 in the gold overnight on 4 different occasions, 4 or 5 different separate occasions going into some of these ECB meetings.
Wow.
And they're there.
Mm-hmm.
So a lot of times we might be out of a trade for a while, and then we'll re-enter when we have an event or a global macro setup. And that's what I was so great at, is picking out those conversations.
Mm-hmm.
Yeah, hold on.
You know, it's the scenarios that Ira comes up with that are so good.
Yeah,
yeah, that's right. And you have to wake up to the sense that there's no shame in admitting that you're wrong. We're wrong all the time, but it's again to live to the next day, to be able to exist and fight it, because listen, the picture is the picture. Now I can change. I always change it, because again, I always compare this to a general on a battlefield. If you're not adjusting to the terrain adjustment, you know what? You have no chance. End of story. That's just what you must. The terrain is always changing. Now, the end result may be the giant fundamental, and that may not play out anyway, because you may get, like here, the COVID virus. Things do happen that I don't call him black swan. That's for a guy who I do have a lot of respect for, Talib. But it's just, you must prepare yourself that, hey, it's going to change. And I have a very good friend, Chuck, who's a great trader. And
he's an unbelievable trader. He's a Hall of Fame trader. Nobody knows him.
We have discussed this for years, because people really don't believe it. When we go, hey, anytime I get into a trade, my first sense is I'm wrong. Because why can I see this and nobody else is seeing it? I must be wrong. And that's my first sense. And then, then I let the trade play out and you go, oh, maybe I'm not so wrong. So, but, you always think, well, why can't anybody else see this? But that's the world of which we live in. And that's the world exists in. And the money can make you wrong, because, again, there's massive funds moving. And there may be a bond movement, especially when it comes to foreign currencies, because as Alan Greenspan famously said, he doesn't understand foreign currency. He views it as a coin flip. Well, you know what? I've lived pretty well trying to understand foreign currencies, and I think probably next to Al Friedberg, I know he's one of your guys,
yes.
who for 45 years, even before I was trading, I paid attention. Him out of Toronto, and the bank credit analyst also out of Canada were really two of the best at analyzing this. And no, there are things, but the problem with foreign currency trade, and that's why people struggle with it, because they don't want to work hard enough for it. Not that you're always right, but the amount of variables, that's why my screen looks the way it does. I have 164 variables of all sorts. Not that they all correlate to currencies, but there are so many variables that play in the currency market. And to find which is the most dominant theme is where the charts help you, because then all of a sudden you get to see where the money is starting to congregate and aggregate to push it that way, because it's also seeing it. So, but it's not easy, and it takes a lot of work. That's why a lot of people are technicians.
Ira, that goes to your preparation, because people think that they can just look at an individual dollar and make something of it, and you can't unless you look at every single cross that's affecting that currency. You can't make a rational decision.
No, and today you could see it, Judd. So you bring that up, and that's absolutely right. And what was the dominant theme today was the euro yen. It helped turn the euro, because that cross, the yen has been strong for a week, and everybody's scratching their heads. It's not like the Japanese aren't doing stuff to try to ease the upward pressure on it. They are. But today, all of a sudden, the euro yen started to move. As the yen moved higher, the yen actually went the other way. So that cross signaled a very important event for the day. And it was something to pay attention to, because that was able to create a catalyst to the momentum, because people have been in that trade. So that was unwind. Same thing with the euro sterling for the last 4 weeks has been very interesting, from ever since Boris Johnson got COVID-19, the corona disease, and people jumped on him, and the pound went down, I think, to about 116. And I said, people, I think, are reading this wrong. If he survives it, which, I'm glad that he did, human to human, I said, it's going to strengthen him as a politician, because he's on the front lines now. He's endured. You can't poke your finger in his eye and go, you know what, you're just making politics. No, he's part of it. He's part of the issue. And in people's eyes, the voters' eyes, he gained a lot of credibility. Now, it's sad that you have to contract the virus in order to do that, but I knew that was going to happen. And if you look to see what the euro sterling has done from after that was all absorbed, it's been a really good trade to have been long the pounds and short the euro. Today, the pound actually stayed really strong today too. So you do see these correlations play out. And because there's so many cross currents, and it's all so relative, that the crosses may be more important than the dollar issue, by the way. And that's a lot of things that we pick up in the technicals, and Judd is especially good at.
And sometimes it's a lot easier to trade the cross because you'll have much less risk.
Yes. Yeah, you can find price points where you do have much less risk, and yet the movement can be phenomenal.
Oh, wow.
I was the king of this.
Yeah. This has been very interesting and insightful. Just to conclude, Judd, could you give advice, a summary of advice to traders? Like, what are the key values or characteristics, like humility, self-assessment, analysis? What would you say?
Well, I think you have to keep your ego out of it, and you have to do your homework, and a lot of homework. I mean, Ira and I both spend hours and hours during the day, after the market closes, and you really have to do your homework on what you're trading. I mean, Ira focuses on the currencies and has forever. I started trading currencies with Ira when they were on blackboards at the CME. I don't trade currencies very often anymore. I only look at them for capital flows, because it takes so much time to do the proper price discovery and homework on the currencies. And right now it's been easier to trade the stocks and the indices and the bond markets.
And
Ira, your advice for traders?
Well, it's always, again, as smart people taught me, if you have a giant ego and a big pocketbook, soon you'll just have a giant ego. So you have to learn to be humble and understand that so much of it is about how to lose and how to minimize your losses to be able to come back and look at it the next day. That's probably one of the most important lessons that you can learn. And it humbles everybody. It's like I look at the coronavirus. If you're not humbled by this and the action of it, you need to rethink. Evidently, you haven't learned anything, so you'll need to suffer a little bit more. But it's being in the markets is very humbling, and yet it's a game of so many giant egos. Because it wasn't, Judd and I would have 10,000 people in the room, but okay. It's not, because there's a lot to learn. There's a lot to learn through conversation, and people, again, on my blog, Notes from Underground, the conversations that go back and forth are enlightening. I mean, really, from a trading perspective, not from an analytical perspective. Because I could say that I'm proud to know 4 of the best, which is Bianco, Bookvar, David Rosenberg, and certainly, it was great to meet Lacey Hunt And I've had, through you and others, Felix Zuloff. I mean, there's so many bright people that I get to exchange views with. You know, that's worth everything. Because, again, I begin with that I think that I'm wrong, and let me talk to people who I have a great respect for their intelligence and be persuaded why I'm wrong. I want to be told why I'm wrong, because I'm not looking to lose money. So I want to have those exchanges. Again, I'm looking for discourse, not validation. If you need validation, go play AYSO soccer and get a trophy for just showing up. I don't need validation. Yeah. I need real discourse. I've been around
too long, Richard, that we're not afraid to say, I don't know, and we're going to watch for a bit until it becomes clear.
Well, great words of wisdom. How can our listeners learn more about your work, Judd?
You can go to whitewavetradingstrategies.com and you can sign up for a free trial, and you'll get an invitation to the room, and you can come in and listen for yourself.
Great. And Ira?
Yeah.
Oh, sorry, if you wanted to.
Yeah. I'm in a few places. I'm with, I make my way to White Wave on occasion. I'm certainly with you, Richard, on FRA. I do Anthony Credelli, who does some really good stuff with futures, television and radio. So I'm out there, and it's the feedback that makes it all worthwhile. I get a lot of really good discussion going, and a lot of great discourse. So, and that's through Notes from Underground is where I get to collect my thoughts, and again, really discuss some ideas, which if it's good, will generate some really quality trades or keep me from bad trades. I'll be the first to admit, well, I'm wrong. Right now we're in the discussion about what's going to take place with the dollar. I haven't yet. I have not been a seller of the dollar because I respectfully find the thought process of those who are bullish the dollar somewhat persuasive in the short-term deflationary view, but me, I view that the strong dollar is part of the catalyst for a deflationary outcome that has to be stemmed. So all of that, but Notes from Underground. So you go to Ira Harris, YRAHARRIS.com. You find Notes from Underground there, and you pursue it. You can just sign on. We have, 3,000, 4,000, 5,000 readers on a regular basis, and it's interactive. So, but not if you're crazy. If you're coming to make political statements, stay home. We don't want you. This is all about the ability to generate profitable trades.
Yes. Great. Thank you very much, gentlemen. Thank you so much.
Thank you, Richard. It was terrific.
The FRA Roundtable Insight Show is for informational and educational purposes only and should not be considered as a solicitation or offer to purchase or sell any securities. The investments, investment strategies, and investment philosophies discussed or presented on the show each involve their own unique risk factors which are not discussed on the show. Any discussions among the panel participants or responses to listener inquiries are based on the personal opinions of the panel participants and do not take into consideration the listener's suitability, objectives, or risk tolerance. Please be advised that you invest or speculate at your own risk.